Alright guys, how's it going? Bit of an early one today because I'm busy today, and I pre-recorded some of it yesterday. But yeah, I'll just fill in the gaps and slot the pre-record in. So yeah, okay, how have we done for the week then? I have beaten my comparators quite heavily. Alright, so since the 6th of October, my quote-unquote accounting year, I'm now beating all my comparators. It won't last. Trust me, it won't last. And there's a disclaimer. Since 2017, I'm doing awfully. I'm still 12 percentage points behind the Life Strategy 60, which is the closest one to me. I've got some confidence that over the next maybe in 5 years, maybe 8 years' time, I reckon I'll be beating the Life Strategy 60. I think that's the best I can hope for. Some of it's a spoiler for later. Let's have a look. Fundsmith didn't do well. SEHD didn't do well. UPS didn't do well. But yeah, Assura's done very well. That one you've never even heard me talk about before. And obviously, the spoiler, REIT has done 35%. And I've pretty much told you everything that's coming in the video. And in the Fundsmith portfolio, there's going to be lots of red, isn't there? CrowdStrike's had a bit of a comeback, so that's good, because last week I mentioned topping it up from L'Oreal. It was only about 100 quid, so not a big deal, but Novo Nordisk is still on a downfall. Anyway, there's the weekly information for Fundsmith. Okay, so most of the news I've pre-recorded. I'll slot that in here. Alright, so I'm going to be a bit busy on Saturday, so I thought I'd record as much as I can today, Friday. Okay, so the first thing, just a quick update. I mentioned the internet being bad here in this static caravan. Actually, I think there was just some sort of malfunction. It went from 4G to 5G like 24 hours after I arrived in the UK. So either my phone or, I don't know, the local mast wasn't giving out 5G, and that's why it was really slow. So now it's much better. So you can all rest easy. And what happened? It was a busy week as well. The one week I have some stuff to do on Saturday is the week that everything happens. The Renewables infrastructure group, they've just sold a stake in one of their offshore wind farms. And the proceeds have been used to reduce the borrowings. Yeah, not much to it really. It seems like TRIG has like a similar thing to all of the battery storage and the solar funds that I own. Because of the discounts they're on, they're kind of what do they call it? They call it a capital recycling program or something, I think. But yeah, they're all doing similar things, and this is it. They pay down their debts. They might buy back some shares with the money from the stuff they sell, and that is accretive to NAV because they're selling at or closer to NAV, and then buying back their shares lower than NAV, and paying off the debt, which keeps them from getting a loan to value too high. Because obviously, if they buy back shares, that increases the loan to value, so they have to do both at the same time to stop their loan to value going higher and higher, or they're gearing. Oh yeah, this is the biggest news of the week. Well, the joint biggest news. We've had a follow-up offer. You know, it's not much more. We had an offer of 48p previously for Assura, and I think it was something like, yeah, here we go, 49.4p. But depending on the timing. Actually, no, this isn't even a proper offer, you know. Yeah, it's just an indicative, non-binding proposal. So it seems like, you know, it's like when someone says, if I offered you this, would you accept it? And obviously that's what's happened. So actually, this isn't fully in the bag yet, but it's a slightly higher, what is that, 49.4p is a 2.9% premium to their previous bid. And they've said here that they would accept that if that offer came in. So obviously the last rejection was just a bluff, wasn't it? It was just a negotiation tactic to reject and then wait for a little bit better money to come in. But if we look at this is Friday morning, so obviously this could change by the time you see this video. If we look at the current share price from Thursday night, there's still 4.39% difference in the bid price compared to the current trading price. So that's why I haven't yet sold it. I mean, who knows? By the time I record tomorrow morning's video, I might have sold it. Who knows? The other thing is, this is the other reason I haven't sold, is that it might not be completely over. Because there is this alternative of a merger with Primary Health Properties, which is kind of like a very similar trust. I never considered it because it seems to be higher rated. It's been trading at a lot closer to its NAV, and as you can see there, there is now a higher yield on primary health properties. But I mean, it's not that far off its NAV, so it's not like a big bargain. But we'll see what happens. And if this if a merger happens, I'm kind of torn on this one. I do like the idea of holding these ones for the longer term, the healthcare properties, and I wouldn't be that annoyed if we just merged with this one. They're saying here that Assura have rejected it, but actually they never got into what the ratio of, because this would be an all-share offer, so there'd be no cash involved, it would just be a merger of the two companies. But obviously to merge two companies, you need to decide how many shares of the new company is Assura shareholders going to get, and that determines how good the deal is. But what they've said here is that actually we never gave an exchange ratio, they call it here, yeah, which did not include a specific exchange ratio. So it's like PHP just kind of started a little conversation. They didn't get into details. They just kind of tested the waters and said, let's have a chat about this. But then Assura made an announcement rejecting the chat without any specifics of what kind of a deal, which is good for Assura shareholders, negotiate hard. Like, the best way to negotiate is to say you're completely not interested in selling. That's the best way to negotiate. So that's good for us. I'm not mad at them for saying that, but here it says here, PHP didn't actually make a proper offer. So how do they know it's undervalued? So yeah, there is this small chance of a merger, but I doubt it. I think that they'll probably go for the cash. But yeah, I'm a bit unsure of what to do with Assura. At some point I might sell, or I might just wait to see what happens. Alright, so Gore Street Energy just had an update and a dividend declaration. There was no news in the dividend declaration. This is just a 1p quarterly dividend, which was, signposted ages ago, so nothing new there. And I think the NAV of 100.7 pence per share has increased by 0.2 pence per share. So that's good, that's progress. Normally this one has reductions in the NAV per share. Not much news there. I won't talk too much about it. And then this is a saga that seems to just be going on forever. Of course, the 10th of March deadline for the exclusivity on the sale of this portfolio has come and gone, and nothing's happened. So it's just going to go on forever, this, I think, or I think nothing might happen, and then the discount to NAV might end up being similar to Gresham House's, which is a lot bigger, like 50-odd% discount to NAV. This is only like a 20 to 30% discount to NAV. But yes, I don't know. I'll keep holding, but I'm kind of pessimistic on anything happening with this sale of the portfolio, to be honest, of Harmony Energy. And then, yeah, here's the other big news of the week. REIT has had an offer as well. That's both of my property investments are under offer. So the yields have come way down. Assura's at 7.22% now, and REIT's down 6.41%. So yeah, on the day it was like up over 30% increase on the day. So that was quite exciting. 108 pence per share. It's still on a 8% discount to NAV, because as we can see here, the shares are now trading above the offer price of 108 pence. I actually sold it on this news because the share price shot up right up to the bid price of 108 pence. So I sold it at 108. I mean, obviously the fact that it's trading above 108, that is the market telling us that there's more to the story here, and we could get bigger bids, because obviously there's still a discount there. But yeah, I took the decision to sell mainly because there was this like-for-like alternative here of Target Healthcare REIT, which do exactly the same thing. What price did I get? Okay, so I'm about flat at the moment. But yeah, as you can see, at this price, there was roughly a 20% discount to NAV for this one, compared to REIT's 8% discount. So what I just thought to myself, look, it doesn't matter if another offer comes in for REIT, because if we just look at the numbers, Target Healthcare REIT has a bigger discount. So even if it just feels like, even if in the short term REIT gets another offer closer to an NAV and we make like 8%, well, it would be slightly higher than 8%, wouldn't it? If an NAV offer came in, it would be a slightly higher than 8% increase in the share price. But even if short term that happens, there still feels like there's more value with a 20% discount on a very similar trust. They say that actually the properties are higher quality on this trust. They talk, because I've heard this trust's manager talk on podcasts before. They talk about all of their care homes having separate bathrooms for each tenant. When I say tenant, I don't mean the care home company who rents the property from them. I mean the actual old person who lives in the room, and they have their own bathroom. And obviously, that's a major factor when I go to Airbnbs. I try my damned to not have a shared bathroom, because that's like living in a flat share. I want my own space, and that's what it's like and apparently 99% of these rooms have their own bathroom, whereas apparently care REITs, a lot more of them are sharing bathrooms, which sounds awful when you're that old. I just figured, even if in the short term care REIT gets another offer and you make a quick 8, 9, 10%, I still feel in the longer term 22% discount's better for Target REIT, because I think it added like 20 pence to my quarterly dividend. So yeah, it was accretive to my income when I made this switch, and as we can see now, it's still yielding very slightly higher. But this yield is obviously irrelevant because it's being sold. As I mentioned earlier, in previous weeks, I was looking at supermarket REIT, but I just feel like if an offer's just coming for one care home REIT, there's so much higher chance of an offer coming in for the same type of company. And actually, I think Target Healthcare is still at a bigger discount to supermarket REIT. Yeah, see, that's only 16%. That was 18% last time I checked. So yeah, actually, apart from the yield, which is higher on supermarket income, it's actually at a higher valuation in terms of the NEV. NESF, I cannot remember what this was. Yes, so they've just basically reduced their interest they're paying on the loans, and they've got the loan going out to 28 instead of 25 for part of it they had here. So obviously it's at the margins, and it's not a fixed rate loan anyway. It's SONIA plus a markup. They've put everything into this one in their RCF. This is obviously the revolving credit facility, do they call it? Yeah. Good news, but it's just at the margin, And then after I bought THRL, I've been struggling to remember this ticker because it's not completely intuitive, is it? Target Healthcare REIT for R, but what does the L stand for at the end? THRL. It's the L that confuses me. Yeah, so basically, there was actually an update for Care REIT, but I decided not to include that because I don't own it anymore. NTA per share, I think that's the NAV, but in property talk, they call it the NTA, I think. Increased by 1.8% to 112.7 pence. And as we can see in June, it was 110.7. So if we look, so that, I'm guessing that means that the NAV they have here, no, that's not right, that's 117. So that obviously isn't that one. Is there an NAV mentioned here? What's this then? What's 117.61? I'm starting to doubt now whether this information here of a 20% discount is anywhere close to real, because Hargreaves Lansdown seem to have it as 117, don't they? But it is a different statistic that they're... I know, because that's IFRS NAV, okay. So what is... I don't understand what Hargreaves Lansdown has then. Okay, so NTA is net tangible assets per share. Well, net tangible assets, and then they've added per share after. So that's what NTA means. That seems exactly the same as NAV, doesn't it? Net asset value. I don't understand where this 117... Let's search for the number 117. Key measures of performance used for the board is the NTA. The reconciliation between the NAV is calculated under IFRS, and the EPRA NTA is detailed in Note 6. Yeah, I'm starting to really doubt these numbers on Hargreaves Lansdown, because 117 doesn't appear anywhere. It's all in it's like 110, and now it's gone up to 112, according to the RNSs for the half-year report. Yeah, okay. So this is an example of me not knowing what the hell's going on. I really don't do much research. So yeah, I'm really confused what is the discount, because that 117 they're talking about here, and it's not like it's suddenly gone up to 117. It was like a year ago it was down to these levels that we're getting told now, and it's gradually gone up to 117 over the past year. So yeah, I've no idea. I mean, it's probably something to do with the definition of NAV. I mean, here it's quoting an IFRS NAV, isn't it, in pence? So maybe there's a different measure of NAV that isn't IFRS, and that might be what is getting included in. But then, you know, where's Hargreaves Lansdown getting that number from? Because if it's not in the RNS from the company, where's it getting this 117 from? Anyway, I'll have to look into that at my leisure, because I'm a bit short on time this weekend. Is there any information about their earnings? Earnings have increased by 2.6%. Contractual rent increased by 3% to 60 million compared to 58.8 million in June. Yeah, basically just bits of good news, nothing amazing. But there we go, that's me confused. Okay, yes, right. So, and then the transactions, I've already told you about selling Care REIT and buying Target Health. And then the other thing that happened was, because CrowdStrike, if we look into our Fundsmith-ish portfolio, CrowdStrike was doing really badly earlier in the week, and I decided to sell a bit of L'Oreal and put more money into CrowdStrike. And, you know, I was just tempted by CrowdStrike's big falls that it had recently. And as we can see, we're now getting pretty close to CrowdStrike and Fortinet having the same percentage in the portfolio. All right, so I'll just splice this into the video that I record tomorrow morning. All right, and we're back, and we had one more RNS that came in after I did that pre-record, and that's from Assura on the 10th of March. Right, so this seems like some sort of technicality, some sort of extension to some kind of rule that is not really relevant to us. But yeah, I mean, this is another reminder that offer that wasn't really an offer that came in for Assura. It was indicative and hasn't actually been made yet. So let's not count our chickens, shall we? Yeah, I am really considering just foregoing the 4.21% that I could miss out by selling Assura here. Because, you know, the deal might not go through, and who knows, if the deal does go through, by the time it goes through, whatever alternative I choose could have done just as well as that 4.21%, for all we know. That's the attitude I took with Care REIT when I sold it and bought Target Healthcare. You know, if Primary Health Properties had a discount that's similar to Target Health REIT, I'd probably just sell it and go into that one. But the thing is, Primary Health Properties doesn't have a discount that's very enticing. Mind you, having said what I just said about Target REIT and getting confused there at the end, maybe this one doesn't, because I'm still not 100% sure what that discount is. Anyway, yeah, that's the last RNS we had, and I've gone through those already, haven't I? Yeah, I've gone through those. Oh yeah, because they're marked, they're greyed out. Okay, cool. Yeah, all right. So that's the week's video then, I guess. It feels weird recording for 4 minutes on a Saturday, and that being it. Okay, to the editing room. See you later. Have fun, guys. Bye bye.